Hey, Alpha fam, welcome back to another episode of Alpha Commission. Today on Alpha Commission, of course, we're going to go over the pullback on the stock market as well as the blood red that just continues across the board on crypto as Bitcoin just kind of meanders sideways. And, we didn't really get the pump that the stock market got, but at the same time, we're kind of getting the drop. So, what was the basis of this blood red across the stock market, which is a sharp contrast to yesterday, which was bright green, right? And that is going to be a little bit of profit taking, but also some of this mixed economic data that just has people very confused right now, right up against the holiday, right up against Christmas. People are just not understanding what the data is meaning. And we do have revisions on the gross domestic product, which does suggest that the economy is healthier than people, expected. And so we are seeing this strong economy, which could potentially support more, interest rate hikes by the Federal Reserve. And so the stronger the economy looks, the more likely it is that the Federal Reserve will increase interest rates. And so that had some people a little bit worried because a jump from zero point 0.3 previously to zero point 0.8, that's more than double the expectation there. A jump from a zero point 0.9 to 1.5%, that's just a huge increase. And then you see this 2.9. Right, the previous measurement, it was expected just to be 2.9, but it actually ended up being 3.2. So we do see these increases in the gross domestic product of the United States, which does have some people a little bit worried that the economy is still quite hot and that the Federal Reserve is going to try to come in and cool off the economy because a hot economy produces inflation very rapidly, and inflation is what's killing people at the pump, at the grocery store, with the cost of food rising, all of these things. And then if we go ahead and we take a look at the index of leading economic indicators, you can see just a little bit of a mixed data. Now this is more of a sophisticated interpretation. So we did have a negative 0.9%, basically negative 1% last month, and then we have negative 1% this month, which does suggest, because these are leading economic indicators, that does suggest that there is some pain to come. The expectation was zero point 0.5. So when you add this together, basically we have indicators for what is happening and then what could happen next. Okay, and so what is happening is that the economy is stronger than expected. Okay, and that means that the Fed may have not done enough in its work. And we also have this other issue that the future looks a little bit bleaker than expected. So combine not doing enough right now plus a grim outlook, and the market just interprets that very negatively. So people might at just surface value just see, oh, the gross domestic product is up, stocks should be pumping because that's good when GDP is up for a country. But in fact, under conditions of inflation, that's just not the case. And in case of leading economic indicators, you might think, oh, well, the economy is going to slow down. So that, counterbalances the GDP. And again, that's not really what the market is looking for, because the market wants a soft landing. The market doesn't want a hard landing. So what the market wants is for Jerome Powell and the Federal Reserve to do what's necessary today, and then for us to have a softer recession later on. But unfortunately, the data that we got today suggest the opposite is true, that perhaps the Fed hasn't done enough and that the landing may be harder than expected. Okay, so that's my not very sophisticated, just kind of a fifth grade level of interpretation there of this economic data reports. But I think anything else is probably just confusing. People go through all the nuance of all these things, and to be honest, the market is pretty simple if you just get into its psychology. And you don't need to be some type of a rocket scientist to figure this stuff out. You just have to understand what the expectation is because the market prices this stuff in. And you just have to think about it in one way. Did the market price in this, or did they not price in that? Right? And so the market did not price in yet a heavier future recession, and it did not price in that Jerome Powell wasn't going strong enough. The market did price in the fact that they thought that Jerome Powell was on track, or that maybe the Fed would be easing, and the market did price in the fact that there could be a soft landing, kind of this kind of just moderate recession, maybe just a little soft recession next year. And they're really open-minded to the potential for more. But being open-minded for the potential for a harder recession does suggest that there could be new lows in the market to come, because that means it hasn't been priced in yet. So again, I'm not trying to be too sophisticated in this data. I'm just trying to give you an interpretation which is understandable by maybe even people just new to these ideas. But hope that helps you understand why the stock market had just a an incredibly red morning this morning. So let's go to the charts and see if we did find any support. Actually, I do have this article that goes over this a little bit. It didn't really give the detail that I'd like to share, so I think I can just ignore that. But let's go ahead and take a look at some truth in advertising. Let's see what I said in the last episode, because I was a little bit bullish, and that's my mistake. I sometimes make errors, like I can't predict, what the data is going to come in at. Even PhDs and these leading economists, they have no idea what the data is going to say until they actually receive the data. And in reading the data, I understand why we dumped. But at the same time, we have to understand that we did have a formation that would have supported bullishness and may still support some bullishness, assuming that we find some support. But let's just take a look at what we made. I am going to be neutral. I am going to be leaning bullish as long as we're above 16,758. And I will be pretty bullish and think that we're going to have some continuation as long as we're over 16,900, because that's where the 2-day and the daily align. And, one thing that we have to. Okay, so essentially I was looking at these three different levels here, which is 16,632. Were we below that or not? If we were below 16,632, then I would be leaning bearish. Well, let's take a look at our current price right now, 16,660. So that's a bigger number than 16,632. So I can't lean bearish yet. Of course, we did have a strong pullback today, but I can't lean bearish. We didn't violate any of these zones, which might suggest the possibility of moving forward. However, that was just a neutral level. In order to lean bullish, we really did have to hold above this level of 16,747. And unfortunately, that is a higher level than our current one. So the pullback that we got on the stock market today, it really did negate the possibility for bullishness. And so we are just right now in neutral territory. We are just waiting to see what the market decides. And of course, the bullish level was anything above 16,900 would probably be a fairly bullish scenario. Even though we had made wicks higher than that, that was the threshold that we could start getting pretty excited. And of course, we just didn't reach that area. So I am proud to say that we did get the levels correct, but my personal outlook was that the bulls were in control. And unfortunately, the stock market just took over today and did pull us down. Now, you can say that there was a strong possibility of us barting to the downside because of just how fast we popped up here. And so there is liquidity in this area. There is liquidity down here. And so these are just the easy pickings for market makers to not only liquidate the stop losses that people set in this level over here, but also to grab some of this liquidity down here and down here before perhaps popping up. So we'll see how that goes. Let's go ahead and turn on those momentum pools that I did create in the last episode, and you can see that, of course, I had described that we were being rejected essentially from the daily. We never made it back into the daily. We did hold solidly above the 5-day throughout the close of the day and just started to meander into the 2-day, just like what I suggested we would do. But you can see this dramatic fall off. That's not a natural movement. This is just the market deciding to go grab liquidity, to liquidate people, to just get spooked by that economic data. And so we do see this just dramatic pullback here. But you will notice, Alpha Fam, that we did sit. Look at this. We sat perfectly. Look at this wick right to my level, right to my daily pivot level. Look to that dollar precision with this wick right here, and then these candle bodies, 1 and 2 candle bodies sitting right on top of my daily pivot zone, suggesting that this was a highly accurate number that I gave to you. Very similar to this 2-day critical level where you see 1, 2, 3, 4, 5 candles, right? 6 candles, 7 candles tapping that area just so, just almost very precisely right at that level that I gave you. And so, again, guys, these are defined by momentum. They're not being defined by support and resistance, but we are just absolutely killing it over here because if we have these levels, we can have a natural range that we expect price action to move through. If you get price action above here and you have several 4-hour candles, then you can expect probably we're going to be visiting this area. If we start to break down from this line, you can expect that we could visit this area, right? Same thing between here and here. So there was lots of opportunity to take trades. It's just, is it a good trade? Is the risk to rewards good? And do you need to be trading in the middle of a channel, or would you rather be trading off of support and then, trying to take profit at, a little bit more of a distance, a little bit more of a resistance area? And if we do just zoom out a little bit, you can see that we do have this kind of resistance level up here. We do have this kind of like middle, mid-range area up here. There could be some resistance, and then around 17,200-ish. And then you also see that we have our support really down here around that 16,300. So essentially we are just middle of the range, and this isn't necessarily a trade that people had to be taking right here. If you took the long from down here at support, congratulations. If you got a sell at the wick that we were talking about somewhere in this $17,000 area, then congratulations. We do have a pretty sizable pullback, and so this could be an interesting area to enter if we are going to end up continuing, right, to just push up here and perhaps fulfill that measured move that we were talking about somewhere to 17,200 somewhere to 17,300 perhaps before getting rejected in this area, trying to grab that liquidity over here. Otherwise, we could end up just flipping this area, turning it into support somewhere around 17,600-ish, right? And if we are able to break above 17,600, then probably we could get up here to this $8,000 area, maybe just maybe like 17,900-ish. If you just ignore this kind of wick area, then maybe 17,900, and you can see how we just get rejected in that area. And so that is the play that I would like to be looking at. You can also see this wick over here and this resistance over here. So this whole area is a little bit treacherous, right, at the top here. And so you'd probably want to, just to be quite reasonable. If you were going to long, you probably want to take your profit somewhere in the middle here, around 17,000, 17,300-ish area, and then also around that 17,000. I don't know, 17,500, 17,900 area, wherever we end up going at. And if we get above that, then we can talk about it in a future episode. It'll probably take a while to get there. Guys, there could be a little bit of a deeper pullback. I'm not sure, but just based upon yesterday's metrics, this is a fairly reasonable area to be looking at. Let's just see. Let's see, 16,660. Yeah. I mean, could we have gone a little bit lower? Maybe 16,550. Yeah, I mean that would have been a more interesting place for me to have considered to long from. So, is this move down over? For that, we really have to consider to take a look at our volatility here. You can see that on the 1 hour, we're kind of pinching shut on whatever is holding us up right now. Let's take a look at the 4 hour, which was driving us down. This still is open ended. Not really sure what's going on there. It may be that the daily volatility is what. Yeah, see the daily volatility, this thing has been pushing us down ever since the top of this area right here. And if we take a look at our volatility just on this indicator, you can see that we just kind of started to expand to the downside ever since we had this wick around 18,000. And this thing just continues to push us down. And so the last episode I was suggesting, and the episode before that we would have to wait until this volatility expansion, ends up playing out and pinching shut. Otherwise, we're going to be in danger of just continuing to have this pullback. And what you can see is that the volatility, it just does not want to pinch shut. That volatility is just continuing to expand to the upside while price action is going down. And so we are just continuing to expand to the downside essentially. And, this thing has a ways to go. It could go to the middle of the chart and then turn around, or it could just end up going to the top of the chart and being quite devastating. So I am hoping that in the next couple days, that this thing does pinch off and that we are able to get a chance for some bullish rise. But there's not really much more for me to say. The bulls are trying on this chart. Okay, the bulls, you can see they're holding their levels day after day. They're holding the critical levels that they need to hold. They held the 5 day in the previous episode. They're holding the that previous daily pivot in this episode, and they're just trying their best. But unfortunately, this market is just being quite savage, especially what the stock market did today, which isn't really any fault of Bitcoin. It's really just those economic indicators. And if we do zoom back in, let's go ahead and update this model because this is just a couple days old now. But the 2 day should be almost done. Let's go ahead and see what I've got mapped here. And yep, for today, you can see that today is overlapping with the 2 day, and the 2 day is overlapping with the 5 day. We can contrast that with yesterday, where you did see, of course, the daily and the 5 day was closing, and the 2 day was still forward because it was not closing, and now everything is overlapping again. So the 5 day will extend for quite a long ways, and it is the one that we have the easiest chance to go back to recover. And why do I say that? Because we do have a lot of 5-day momentum here for some neutral momentum. So even if we have a pullback, the 5-day is going to still have some chance to recover this, no matter how far we dip on this one, unless it's just catastrophic, right? But the new daily pivot is also down here around 16,500. Yes, there's the possibility that we could come to visit that 16,500 area that I was talking about as that volatility on the daily continues to expand us to the downside. We seem to just to be getting hung up here on this 2-day neutral level, which does correspond with a little bit of this these wicks right here to the downside and to the upside. So both resistance and support there. Um, so we're just getting hung up on that area, but this could just end up just tapping down to the daily pivot somewhere around 16,500 before potentially turning around. So just be aware of that, okay? Just want to give you a bit of a heads up. Other than that, we have lost the daily, we have lost the 2-day, and we have lost the 5-day. So overall, this is a bearish orientation, but we haven't lost the daily pivot. So overall, I am just continuing to be neutral. And if we are able to bounce off of the daily pivot and perhaps go back and tap that 17,200 or even this $17,900 area, then this will have just been a higher low, right? So there's not too much to complain about that. If you have low and then you make a higher low, even if it came back pretty significantly, that's all right. That's called an uptrend, right? Like that's what you want to be seeing. And if when you're establishing an uptrend, you have to put in a low at some point. It doesn't mean that you're bearish. It just means that you're putting in a low. So if we do violate that area, then I'm going to be worried that, well, we could put in a double bottom of sorts, but I think that's more of the double bottom area. This is more of a wick. So if we do get lower than that, lower than, 16,300-ish, then I'd just be worried that we're probably going to be breaking down into this $15,000 area next. And let's go ahead and just take a look at what our EMAs look like. I'm sure that they look just absolutely awful, but let's just see how that goes on the daily here. And yeah, you can see that we got into this little bit of a channel between the 9 and the 4. And because of this wick down, it just pushed us over the ledge, okay? And if we had had a little bit more of a wick to the upside, maybe we could have curved this thing up, but we had more of a wick to the downside, just kind of retracing this candle a bit, and so we are just continuing to fall. And there's nothing really underneath us to support us right now in terms of the EMAs, so we do just have to wait for this play to work out. If we do take a look at the bigger picture on this, you can see the 50 and the 50 that was crossing. That is that Alpha 9 knockout that I was talking about, that kind of trademark play that we talk about over here. And then you had a similar thing over here where you had an Alpha 9 knockout on the 50 and the 50. And what happened is that we just did a pullback, bounce up, pulled back again, bounced up, huge pullback, and then this thing turned bullish because actually that's a bullish cross, before dumping after hitting the 89. And so could history repeat itself? Well, let's take a look. We have the 50 and the 50 crossing on a pullback. We have a pump. We could have another pullback, which it seems like we're having. We could even have another pump and then another pullback. And as long as we don't violate these really critical areas over here, and especially if we hold above that 16,300-ish area that I was talking about, then Yeah, no problem. Perhaps we could go ahead and pump all the way up to those 89s, which could be that $8,000 area. These will come down over time, and it'll have a bearish cross of its own. I mean, an alpha 9 kind of knockout of its own potentially, which could end up bringing us lower. And if you do look at the 89s here, if we do have a pump, they, well, actually, even without a pump, this thing's going to be crossing. So I don't know. That could be a risk for another pullback. But I really don't look at the 89 too much for that. Once you get to these higher time frames, EMAs and SMAs, they just the power of that cross isn't as high as it is on the 10 and the 20 and even the 35. But yeah, so I don't know what to say. We are having pullbacks. This bull flag is starting to, take shape here. We had this bull flag, kind of formation, ever since the top of the market. Just bear flag after 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 bear flag. And, it doesn't matter how much you zoom in or zoom out. This is a bear flag also, right? And there was the potential for this little bit, just really zoomed in for this to be a bull flag. And it just didn't play out that way. It just didn't play out that way. So now we're just looking to see, do these bullish crosses, right? This is a bullish cross. 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 Do these bullish crosses have enough energy to pull us up at least to these 89s, potentially even up to these, up to the 200s on the daily, which would be extraordinary? Or, are they going to get defeated around the 89 or even, right now, right? Which does sometimes happen. So we do have to prepare ourselves for bearishness, but again, I'm just not going to be in bear mode until we cross the daily pivot. And we didn't cross the daily pivot for today. Okay, if we just pull back, if we just continue to break down, then there's still some chance for us to pump off of this. Okay, so just have to watch these levels. You can see it's interacting a lot with this level that I have here, and it'll probably interact with this level as well. Let's go back to the 4 hour, and you can just see same thing, just really bearish EMAs, and of course 1 hour as well. Everything underneath the day is going to continue to be just really ugly. And we just have to let it play out. There's nothing else that we can do about that, right? We just have to let it play out. Let's go ahead and take a look at some of these stock market things. Let's go ahead and go to the let's go to the SPY. For the SPY, you can see that we did have these CME gaps in the chart, just the big holes in the chart, which potentially we could have attempted to recover, but we didn't, right? We didn't recover those things. Instead, we actually made a new gap and are continuing to fall like a lead balloon. This looks much, much worse than a Bitcoin. Okay, so Bitcoin at least is defending this territory up here, but the stock market is just, I mean, it's just making a new low compared to its previous area. Now, does that suggest that maybe Bitcoin might as well? Maybe Bitcoin's going to be following the stock market. So again, we have to just be aware that what happened here was not bullish. And let's go ahead and look at the NASDAQ. Same thing. Had a gap up here, could have been filled on our way up, but in fact, we just turned around and even opened up a new gap as well. So, yeah, unfortunately, there's nothing bullish on this one either. It's just breaking that low and continuing to fall. Let's go ahead and look at the VIX. The VIX is just spiking like crazy today. So, it's just something that you don't really like to see where the VIX is popping up, especially this fast. Uh, Trading is just going to be awful. Trading is just going to be completely, completely awful. Whenever the VIX just spikes up, just trading gets really bad, okay? And it does have to do more with how the VIX is trending rather than the level that the VIX is at. So the level can indicate, yeah, just how terrified the market is, just how bad things kind of look, but the direction that the price is moving on the VIX, that's what's most important to determining whether or not it's going to be a good trading day or a bad trading day. If the VIX is nosediving, then that's going to be great for trading. If the VIX is spiking up, that's going to be horrible for trading. It's just going to be a really bad trading day for the bulls anyway. And you do see that the VIX is spiking up here, so that's not good for us. For the DXY, same thing. We had this breakout. We started to break down, but now we're spiking back up again. So the last couple hours, we did recover most of what we broke down from when Japan, essentially, surprised the world with their interest rate increases, which is something that they don't do a lot of. So, the world was a little bit shocked by how Japan was changing its policy, which had been a very long-standing policy. And so, yeah, the world is changing. And, is this chart going to turn around? Well, this is a falling wedge here. And so, could it come back to, you know, 107? Could it even come back to 110? Yeah, I mean, people are saying that the dollar is done, but based upon this, I just don't 100% believe that yet, and I'll believe it when I see it. If we break down to 100 and then lose 100, then I'll believe it. But as long as we're over 103 here, this is kind of a nice area to bounce at. We could potentially go as high as 107 here and then even work our way back up. So, I just don't discount the dollar yet. And other people do, but I just cannot say that this is topped out. I understand why other people believe that, and it may be true. It may end up being true, and maybe assets just appreciate over time. But I don't know. There's just nothing here to give me that conviction, right? I believe a lot of what they're saying is just out of belief, and I just don't have any data to support that. I mean, assuming that the rest of the world continues to raise their interest rates and fight the same way that the Fed has been fighting, then probably, yeah, then probably there's a limit on the dollar. But if the Fed comes back and is a little bit more aggressive next year, maybe in spring, then this thing could just spike up again. Guys, I think I'm gonna leave it there. Pretty tired today, so I'm just not able to get my energy this morning. But if we do look at the chart again, I just don't think that it's done pushing down yet. There is the possibility of breaking that daily pivot around 16,500. If we do that, I would watch out. If we start to bounce off of that daily pivot, you know, we might have a chance. We might have a chance to finish this move up to 17,200 ish, or maybe even 17,900 ish. But we're just as likely to continue to fall to the downside. Okay. Um, Again, we're at the middle of this formation, and tapping the bottom and then coming up to the top is just as likely as tapping the top and then coming to the bottom, right? It's just we don't know how the price action is going to go yet. And if we take a look at this, this area up here, you can see a very similar thing happen, right? Just break down, pop up, right? Break down, pop up, break down again, tap the lows. We could tap some lows and then go up and then break down, right? Something like that. So this is just a gamble at this point, and you really do have to be managing your risk, making sure that you have your stop loss in place, and you don't have to take every trade, right? You don't have to take every trade. If you see a natural range where it's like 15,500 to 18,300, then you can try to buy at 15,500 ish, right, or somewhere in that area, and then you can try to sell up here in this area of 18,000 ish. You don't have to you don't have to be trading from the middle of the chart. That's just my point. But of course, just to continue to make episodes, that's why I do this analysis. Personally, I'm not in favor of taking trades in the middle of a range. It's just a lot of maintenance and a little bit riskier. As you can see, we can just turn around on a dime. But you get down to support, right? And you tend not to break that support right away without retesting the highs. All right, guys, I'm going to end it there. That's your alpha for the day. Hope you're enjoying your holiday season. Thank you for supporting the channel. And, we're going to have lots of good content coming up in the new year. I am just running around. I'm actually in the middle of preparing my house for moving and taking care of some kittens that I'm rescuing, as well as a bunch of other stuff up in the air. So sorry for being a little bit exhausted the last couple episodes, but we will come back with a vengeance in the new year, and I will continue to be making these videos. So that's your alpha for the day. Stay safe and happy trading.